A very good afternoon. You're watching the Tuesday edition of Market View right here on Eswatini TV. My name is Nosilisi Tole and welcome to the program. Now, the Central Statistical Office has released the Consumer Price Index report for November 2025, of course, offering a critical snapshot of how prices for everyday goods and services are moving and what that means for households, businesses, and different institutions alike. Now, the figures show that headline inflation eased to 2.4% in November, down from 2.9% in October, and significantly lower than the 3.7% recorded a year ago. This decline signals a cooling of price pressures at a time when consumers are, continuing to navigate the cost of living. But beyond the numbers, the CPI plays a vital role in shaping economic stance, from inflation targeting and forecasting to wage adjustments and regional comparisons. Today, we'll get to have an understanding of what this report means for our economy, consumers, and the outlook heading into the new year. But first, our business stories this afternoon. In our business news, we begin with this. Eswatini is moving full speed ahead to align with the African Continental Free Trade Area Investment Protocol, which is a framework designed to unlock cross-border investment, reduce barriers to trade, and strengthen Africa's investment environment. Key steps include the proposed Eswatini Trade and Investment Promotion Act, the development of a national investment policy, and other targeted reforms. These actions were outlined by private sector consultant Zizwe Vilane at the Protocols Validation Workshop held at the Hilton Garden in Mbabane.
Private sector consultant Zizwe Vilane stresses that Eswatini's next move is to implement investor grievance mechanisms and to develop targeted incentives specifically tailored to each investor, no more one size fits all.
Kuyavela ukuthi nabangena labatshali betimali sebaba ngevani nahulumende. Le ndlela lesakhe ngayo lo mthetho usangaqinisi lokho. Kusuka kuphi? Kusuka ekuthenini simave asifuni ukuthi nasicabana nabatshali timali sitikhanzise sisenkantolo. Kuyalidulela live phinze kuyabulimada lobudlelwane. Siyahamba ke nganaku labathi ngesilumbi phecelede alternative dispute resolution mechanism. Uthi ke lo mthetho waka AFCFTA ngulelo nalelo live alibe ne investor grievance mechanism. Lekungiyona sisingede side yona nje lakhaya. Kwesibili lokho lesiniketa abatshali timali ukuthi sibajabulise nabahlanyela nakulesithi ma incentives akukakheki kahle. Lokwethu akubuki ukuthi live liswele kuphi. Ngawubekisa mnguni sithi umsebenzi eshiselweni sithi umsebenzi elibonjeni ngejana ufika kangwane utawunika lokufanako noma emathapha noma elibonjeni noma elavumisa.
The consultant from the African Continental Free Trade Area delves deeper into the investment protocol and its far-reaching impacts.
It's a very important protocol to provide a more harmonized legislation across the continent, and it's a landmark protocol that really focuses on a range of issues such as investment promotion, investment facilitation, sustainable development. And this is a shift from the investment treaties that were here in the past, which focused particularly on investment protection issues. And so we're discussing today and in the report issues related to the protocol investment and how the regime in Eswatini, the investment regime in Eswatini, compares to the best practices that have been enshrined in the protocol investment.
Business Eswatini's President Mvuselelo Fagutse shares the business community's perspective on the protocol.
It seeks to align the way we do business or the way government attracts businesses into the country in the same way as other countries do. So in other words, if you have an operation in Kenya and you want to set up a business in Eswatini, you want to find that the protocols of how you go about getting licenses is the same. There are not many bottlenecks that you find along the way to just getting a license to do business. So I think the Africa position helps Eswatini align itself, and it helps us as private sector also know the rules of trade. So if a business in Eswatini wants to set up a business in Uganda, it will ensure that the rules of engagement are the same.
The African Continental Free Trade Area Investment Protocol marks a groundbreaking shift in Africa's approach to governing investment, setting a new standard for trade and business across the continent. The Protocol on Investment is a key part of African Continental Free Trade Area Agreement, creating a unified legal framework to promote, facilitate, and protect intra-African investments while focusing heavily on sustainable development, economic, social, environmental, and replacing older and less effective bilateral treaties. This is according to the African Continental Free Trade Area website. Reporting, Nelson Dlangamandla from Inkosi Nzinisa Mbabane.
As the Eswatini Water and Agricultural Development Enterprise continues with the implementation of the Smallholder Agriculture Productivity Enhancement and Marketing Project, the enterprise has signed a Memorandum of Understanding with the National Maize Corporation, Eswatini Environment Authority, Ministry of Tourism and Environmental Affairs, and the Ministry of Tinkundla Administration and Development. EOA Chief Executive Officer Dr. Samson Sithole explains the efforts behind the MOU.
SAPEM was designed to also promote an integrated multi-stakeholder solutions. These partnerships respond directly to the need by aligning mandates, resources, and expertise. The MOU represents a framework for collaboration, innovation, and coordinated implementation.
The acting principal secretary in the Ministry of Tourism and Environmental Affairs, Hlopsile Dlamini, has given assurance that the ministry will fully honor and support the Memorandum of Understanding. On the other hand, the principal secretary in the Ministry of Tinkundla Administration and Development, Nonhlanhla Dlamini, has emphasized that the Memorandum of Understanding will empower communities, give them a voice, and enable them to contribute meaningfully and sustainably to the national economic development.
Lihhovisi la mabhanane lomkhulu etikweni cishe litabangi lona leli buke strategic on how we are going to implement the activities as articulated. Litabeke lisitwa ngu Department yaka-MET.
We are partnering in developing chiefdom development plans ne EWADE. This is a program which is very important because communities get the opportunity to come together and brainstorm of their priority needs. For us, it marks the bottom-up approach to programming.
Thabiso Nzuza, Chief Financial Officer at the Eswatini Environment Authority, shares why it is crucial for the authority to be part of the Memorandum of Understanding. Meanwhile, National Maize Corporation's Chief Executive Officer Mavela Vilane says the Memorandum of Understanding will go a long way in ensuring food sovereignty in the country. He reveals that each year about 1.5 billion emalangeni is spent on importing maize and beans, a situation that the agreement is expected to significantly address.
Through this partnership, we will work closely to ensure proper environmental affairs, compliance with national legislation and effect safeguards, and the responsible management of natural resources. The MOU creates opportunities to promote community-based natural resource management and green enterprise, particularly for youth, women, and vulnerable groups, ensuring that environmental protection goes hand in hand with livelihoods and economic growth.
Leli veleli ke bekunene imali nangigcina kubala iyendlula ku-1.5 billion ngeminyaka lephuma la kangwane iyothenga emabhonjisi nemmbila. Le mali leyo ke kuma projects lafana nalawa ngicabanga ukuthi silwa naloko ukuthi le mali leyo ayihlalela ngekhathi ekhaya.
The Smallholder Agriculture Productivity Enhancement and Marketing Project, supported by the government, the International Fund for Agricultural Development, and the Green Climate Fund, is designed to transform the livelihoods of over 19,600 smallholder households. According to e-Way Chief Executive, the project is expected to reach nearly 117,700 people across all 4 regions of the kingdom. Reporting, Elswendla Ngamandla, Vuminkosi Nzinisamba Bane.
And you're up to date with some of the latest in business. Stick with us. After this, we're discussing the CPI report.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.za.
Welcome back. You're still watching Market View. Onto this now. According to the Consumer Price Index for November 2025, headline inflation eased to 2.4%, down from 2.9% in October this year and lower than last year's levels. The figures also point to subdued price pressures, with month-on-month inflation at 0.0%, declines in food prices, and a sharp slowdown in restaurants and hotels. To help us understand what this trend means for the economy and households going forward, we're now joined by economist Anele Sibia, who comes to us virtually. Good afternoon to you, Mr. Sibia, and thank you for your time. Perhaps you could allow me to just point out the numbers again. Headline inflation eased to 2.4% in November from 2.9% in October this year and 3.7% a year ago. From a macroeconomic perspective, what are the factors that have, driven this decline? Is it positive, especially going into the new year?
Thank you, Notile. Good afternoon to the viewers. So there is a couple of issues that are quite pertinent here. The first one being, the seasonality of inflation, in the sense that we are now at a point where we are in post-harvest and in harvesting season. So we're seeing, food inflation going down drastically as well. And then also, if you look at, things like transportation, that one is also going down as well, likely because if you look and trace the price of Brent crude oil over the average, it came down from remember last year it came down from that 80 type of region, $80 per barrel, but now we're sitting at around, today it's at $59 per barrel. And another thing that is now normalizing in markets and within the economy overall is, the normalization of transport post that Russia-Ukraine invasion, and the impact on supply chains, which was then coupled with the COVID pandemic as well. So what we are seeing right now happening is all those factors are coming together to play out quite positively. But what we are now looking out for is, in terms of overall demand in the economy. In terms of what we're seeing within the hotel and retail, within the hotel sector, again, that's quite normal. We do expect that to happen given the seasonality of our tourism sector. So we do expect now that as we are coming into the Ingwala season and into the Eswatini season, we should begin to see a bit of a rebound within that sector. But it could also be an indication of subdued demand overall within the economy. And then if you look at, factors like when you look at, at food and what do they call clothing and other garments. We're seeing those ones, just showing some signs of an uptick, which somehow shows that there is a bit of a demand in the economy. But what we're looking out for mostly is what does this mean in terms of overall demand in the economy? Are we not going to be dealing with a subdued demand, outside of the normal, deflation in certain prices? Because if you look at the inflation numbers, you can see that there are those in like the hotels. They did show some signs of deflation, coming down below, into that negative territory. But what we want to ascertain and be sure of overall is what does this mean for demand overall in the economy? Do we have effective demand to continue driving growth? So that is what is going to signal and tell us what is going to be happening in terms of monetary policy going forward, and also in terms of the fiscal measures that we are going to see coming through from government, and also what business needs to do within this environment. But my read right now, as it were, is the seasonality factor there, Notile, and the normalization of certain, commodities. And we do expect that should we see that breakthrough within that Russia-Ukraine talks, peace talks, then again, we should continue seeing, transport continuing that downward trajectory, because it's going to be opening up the oil markets to the Russian oil, which right now is under a lot of sanctions. So once we see that coming back into the market, if we are indeed going to get to a breakthrough earlier on in the next year, then we are going to be quite on a low inflation footprint. And I think what then this does for us is we've seen South Africa rebasing their target for inflation to now between 2 and 3%. So what we're seeing right now is we are at a very good point, a good starting point, because we're already within range and we're already below that 2.5% range. So again, that means for monetary policy, what we are going to see happening is a change in policy direction, where we would have actually ideally expected to see a bit of an easing in monetary policy. But right now, we do expect the governor to continue being accommodative, as right now the numbers are no longer showing to signs of, weakening demand. In terms of the targets of the central bank, we do expect the governor to hold in terms of the interest rate. So we are now pricing out those cuts in interest rates, but we do see scope for 1 or 2, but it's a wait and see approach to see what happens in terms of these numbers. Are we going to see a rebound at least to that 2.5 mark?
Right. Thank you for that one, Mr. Spear. While we relate this report to the consumer, I note that food and non-alcoholic beverages inflation fell to 0.0% year on year from 3.6%. Given that food carries a heavy weight in household spending, what does this mean when we're talking of the cost of living and food security?
Thank you, Notile. So I think, again, I'm going to revert to that point where I brought the seasonality of the food inflation. Post harvest, this is what we always see happening to food inflation, where certain prices are coming down largely. And I like making example of tomatoes, probably because I buy them as well. I mean, there was a time where I had to spend like around 40 rands, 40 malangeni for a kilo of tomatoes. But right now, if you go to the shop, you're spending around 12, 13 malangeni for a kilo of tomatoes. That's because of the supply response within agricultural products. It tends to move with the seasons. We are now in summer, and that tends to show up that food output, and then therefore bringing the cost of food down. So what we can read into that is seasonally, yes, we are going to see a bit of relief in terms of what happens in terms of our food expenditures within our households. But what we need to also be mindful of is overall, when you are assessing the cost of living pressures, it is not on what you have to deseasonalize it, take out those seasonal trends of it, and then still look at what is happening to the core inflation in itself, which in this point still shows that there are quite a number of factors that still remain as those downside risks to the overall inflation story.
When you look at it from a business and investment perspective, what does a 2.4% inflation rate, what signals does it send about pricing power, input costs, and of course consumer demand?
If one is to look at it from the viewpoint or from the lens of business, we have a couple of, it could be a double-edged sword right now. First, a low and stable inflation, brings about predictability in the markets, which is what business likes. But then at the same time, it also could be telling of weakening demand, which would end up affecting the, businesses adversely. And also, one other thing that we price into this is the fact that we relatively are going to have a no inflation target, even though the governor has not said anything. But we can infer from what we're seeing happening in South Africa, and also based on the fact that we are within the Central Common Monetary Area, and we tend to have a unified monetary policy with South Africa and all the other 4 countries within the CMA. So we should expect to start seeing those talks, pointing to the direction of saying, all countries need to now start targeting this, because you can't have that much differential within South Africa. So there are those issues there that from a policy perspective, I think the governor is at a good starting point to now start synchronizing with South Africa. And then business as well, that means we should, when we go to the negotiating tables, going forward, we're now going to start expecting 2-point-something% salary increments. And because the inflation expectation is we're going to make sure that inflation stays within that 2 to 3% range. So now that makes for a predictable environment within business, but this would be quite a different story if we're seeing inflation going down because of subdued demand. So that's one of the things that I think businesses are weighing, and everyone is trying to figure out what really is happening in this economy. And when you look at the fact that, things like food inflation are going down, we could say those are seasonal, but then when you look at the recreation and the hotels, again, if that's now deflating, depending on how it is weighted, if it is weighted mostly based on accommodation, then you could say we expect, again, it's seasonal. But if you also have your restaurants and all these other entertainment components within that very same index, then what it means, Notsile, is there is a bit of signs of weakening demand across in the economy, which would have to be a major cause for concern for business.
All right, thank you very much, Mr. Spear, for your insights on the CPI report. We're back with you again in about a minute or two, just for a wrap up of the market today.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.za.
Welcome back, and thank you for staying with us. We are now going to cross over back to our in-house economist, Sanele Sibia, coming to us virtually just for insights on all that is shaping markets today. Mr. Sibia, what's your overview of markets this afternoon?
Thank you, Notsile. So markets, again, where, when you're looking at markets today, it's a bit of what one would call some carnage across the board, across all major markets that we are monitoring here. And largely due to the fact that we are seeing a bit of those concerns going back around what the tech guys are going to be doing and whether we're going to start seeing a bit of profitability around, those artificial intelligence stocks, since, given the huge amount of investments that have been made. So, investors are now starting to see if they're going to get a return on that capital. So if you are looking at the US, that is quite telling in the sense that the Nasdaq Composite has actually lost 137 points in trade, just to close at 23,000 more or less. The S&P 500, not just staying steady there, that's losing some 10 points, and the Dow Jones Industrial Average again losing some 41.49 points. This is actually on the build up towards the jobs data that we're expecting, and we're also seeing Brent crude oil coming in to have a bit of a story to tell there in terms of what the markets are pricing in terms of overall demand. So we're seeing the US markets being dragged down largely by those, and then coming across the pond into the Eurozone. The FTSE 100 there in London has actually lost some 30 points in today's trade, but sitting again on that 97,000 mark, 9,700 mark. So if you are thinking back to a couple of months ago when the Tories took office, that number was somehow very close to that 9,800 and 9,900 mark, showing that there were some signs of optimism around the UK economy. But right now, we've seen the Office of Statistics in the UK, they took out the numbers showing that unemployment is at its all-time high within the UK economy. So markets are now waiting for the Labour government to actually deliver on the jobs that they promised. So all of those news coming out now with the Bank of London the Bank of England expected to make a ruling around the interest rate right now. So now that somehow sent a damper in the sense that we don't expect them whether they're going to cut or they are going to hold steady. But now with the jobs numbers, you do expect them to cut a bit, but markets are not at all quite optimistic around that. So Germany, the demand story across the globe coming into play, and the CAC 40 there in Paris, doing a very relatively well, flatlining, gaining some 11 points in today's trade, largely because it's showed up by the shopping of season right now during the festive. And then when you move on to Asia, we can see the impact of those AI evaluations and those AI plays coming into play largely. The Nikkei is back below 50, losing 783 points. The Hang Seng is actually losing some 393 points, and the Shanghai Composite Index losing some 43 points there, showing signs of the fact that markets are getting really worried around that tech space there. And then coming into Johannesburg, the Johannesburg Stock Exchange remains steady at the 113 mark, but just being supported by the miners in today's trade, doing relatively well because gold is still sparkling, even though showing some signs of a downward trajectory. And then in terms of the Eswatini Stock Exchange, nothing has changed there. So gold remains relatively high at $4,300 per ounce, and crude oil is below that 60, largely driven by those Russia-Ukraine peace talks. It seems we are at a verge of a breakthrough. And then in terms of the currencies, the Lilangeni remains strong against the dollar, sitting at 16 Malangeni 78 cents per dollar, 19 Malangeni 73 cents per euro, largely driven by the fact that there is overall weakness within the dollar, and also the fact that gold continues to do well, and the new targets in terms of inflation, in terms of the rankings around South Africa, just showing us signs of a strong South African economy to which the Eswatini economy is anchored. Thank you, Notsile.
Thank you very much, Mr. Sibiya, in-house economist analyst Sibiya, there showing insights on all that is shaping markets today. Otherwise, this has been Market View. Thank you very much for your company. Until the next edition, bye-bye.